Good day, good Sunday, everyone. I hope you're all blessed. I hope this week was interesting and that you've learned quite a bit during this week price action on the ES and the NQ. I will start by reviewing the XY, then going on with the yields, and then going on with NQ and ES. I will leave the complete video for the private mentorship, and I will give some part, I would say the relevant part, in the YouTube free channel. And the rest will be some, a little bit of extracurricular learnings on the markets and how you can repeat it too. So if you're interested, you can go to the Discord community and click on the enrollment, and you will be able to come into the mentorship. So if you're already in the mentorship, sorry for this. Hi, hope you're doing well. This is this week's events. So Monday we have nothing basically. Tuesday, IVPMI from the Canadian part. So maybe something to note. Euro holiday. Yield auction is something I take actually consideration into. I look at it and I'm interested because yields affects bonds, which affects the indexes. So these are important. They're not extremely important as, for example, an NFP or FOMC, but they're somewhat around there. Employment on Friday. So let's go into the charts a little bit. So this is the XY monthly chart. Keep your focus on this monthly fair value gap here that launched price higher toward this monthly FEG and towards this zone, which I'm gonna go into in detail a little bit before, a little bit after. But you see there's this small zone on the XY that was not filled with inefficiencies. With the wick, it left it open. So I keep it like that because whenever we're gonna go back here, I don't think it's gonna be the case right now, but whenever we come back at these levels, then it will be interesting to see. So this is the whole narrative. DXY is bouncing from a monthly array, right? That's the narrative that we have right now. And so let's see what we have. We get closer on a weekly time frame. The XY bounced from this weekly fair value gap since March, and then in April it bounced. So a month ago, literally a month ago, it bounced from here. Now, during these weeks, the 3 previous weeks, it was kind of choppy. We went into the weekly bounce price range here, which is the weekly fair value gap that you have here. Use these in your chart. I would say keep it to the bare minimum on what you have as lipstick on your chart. Make sure you don't have a lot of things. Sometimes I see charts and I'm like, well, no wonders why you're getting riled up in the markets, because it's nonsense. It's a lot of colors, a lot of stuff. So keep it very minimal, with light colors, transparency and stuff, so that you can see through, and so it's not aggressive for your eyes. So bounce from the weekly fair value gap. You can see this weekly order block here, almost touch it, maybe 2 ticks difference, and then we recaptured right at the fair value gap low on where the tail is here. If we go on to a daily chart now, let's build up a little bit of narrative, right? So Monday it starts off where we dropped a little bit from what we closed on Friday. So we dropped. Tuesday we went higher. Wednesday we expanded lower. Right, so we touched almost the liquidity void here. On the daily chart, you want to have this void. I've been talking about this void for I don't know when, months, weeks, and you want to keep this void here on your chart. So I'll give you maybe 5 seconds to do that. And as you can see, the wick that we had on the daily chart This is also a daily fair value gap, but I didn't note it. I didn't think it was important to note because we have this beautiful daily volume imbalance, which gave a better outlook on what price was going to do once we dapped into this again. The weekly order block that we shown is here on the daily level, so almost touched it. You can see very small difference, and then we pumped. Now remember, this week, let's go into an hourly chart. There we go. And this week we had NFP, which happened on Wednesday. So we had this drop, and then on Friday where we had the news, and then we dropped, right before the open, and then all day was a retracement higher based on the 1 hour chart. I'm saying retracement on the 1 hour chart. I'm not looking this on the monthly right now. This is hourly, so I'll just keep that in mind when I say retracement, reversal, expansion. These are all dependent on the time frame. If I was looking at the monthly chart, this is likely to be the beginning of an expansion. As you can see, I've noted this daily VI, and on the daily chart, it does not look like anything relevant. It's like, okay, it wicked against it. I can do nothing here, right? But if you go on the hourly chart, you can see that the bodies could not close below consequent encroachment of the gap. So it's very precise. My trading is extremely precise, and as you can see, it did not miss. Now, if I was trading forex, of course, I could have taken this long, and made a little bit of money. But I don't do yet. I trade indices because of that's what the funded companies Apex allows me to do. But still, as you can see, these all can be opportunities when we have our own. If you have a personal account, or if you have a prop firm that allows you to do so. So retracement on the 1 hour, because this whole narrative on the 1 hour, the IBDA is kind of bearish. As far as the 20 previous candles, it is bearish. So then we just gapped up. We gapped up, and roughly around London close, most of the action just stopped. We just consolidated and basically climbed up a little bit higher on these level. So again, my interest on the XY, I'm going to be clear, is this void. Once we fill this void, I do think we're going to take some buy-side liquidity around these levels, but I remain uncertain. And the reason I remain uncertain that we take these highs and continue higher is because of the narrative. Again, if you guys know, I'm a macroeconomic major. It's something I've studied a lot, maybe too much, in class and out of class. And it's something, when there's interest rates talks, and when people are talking a lot about interest rates, the markets like to consolidate and manipulate people out, because they know geeks and people that don't know anything about trading are gonna be trapped into this into the DXYs, into the markets basically. So that's something that can happen on the DXY, on the NQ, on indices, and everywhere. So let's go back to yields. Same sentiment on yields. As you can see, we went to the consequent encroachment of the weekly fair value gap. We did a little mohawk around here, and then we dropped again on this week. So let's go into a daily chart. Same narrative. As you can see, we have this move higher on Tuesday, whereas the rest of the week was just a down move. So the NFP didn't scare me. I think most of it was basically a part of a manipulation on the weekly chart. If you can see the weekly, I think we're still gonna go and fill this inefficiency. I think the weekly bullish fair value gap is doing a wonderful job at keeping us above. Could be wrong, but my swings depend on it. So sorry for that, I had some noise, so I had to stop the recording. So weekly chart, we have this bounce, and this is what I expect to take. I feel this inefficiency, come higher, and then take some buy stops here. Now let's go into NQ, which is where I want to go mostly, because yields, I don't have a lot to say. It's still pretty okay. Let's remove some lipstick. We have this monthly fair value gap. We bounce around here, took buy side liquidity, the all-time highs that we had on the NQ. And this is all to keep in mind. Take this level and extend it to your right. I know ICT likes to take some time, click a line and show you how a noob he is on the charts, and but just do it on your own. I've already done it on my own. So keep this level here. These are all for journaling purposes. As you can see, I have a lot of annotations, so don't look into this, but just keep the narrative in mind. We took some buy side, we retraced a little bit, and now we bounce from this weekly bounce price range that I'm going to talk just right now. You see, we have this weekly fair value gap on January 2022. This is a bounce price range, and I took it and extended it to my right. And as you can see on the monthly chart, it definitely contained price from going lower. I'm not going to be ignorant and tell you that this weekly fair value gap did not do its job, but we had a closing basis that closed below the gap. So if I just take this, as you can see, the body's closed below it. So it means that the order flow is not necessarily going to keep, it's not right on to read it on the weekly chart. And so that's why my interest was more on the monthly, and then try to make sense of what's all this, right? And sorry about all the drawings. I hope it does not take your attention. If I don't mention things, it's normal. The mentorship people can ask, of course. Well, everybody can ask, but I give more sauce to the mentorship people, so just so that you know. The weekly time frame had a magnet here. We had the weekly fair value gap that was here. Now, I think we're gonna maybe hover here. We have a volume imbalance here that is very small, but still there. That might want to come dab into this and reject. As you can remember, I was bullish on the XY and the yields, and I still am. So I think we're still gonna take some buy side around these. But if we go onto indices, and this NFP week is a upper close candle, well, this for me is a perfect monthly power of 3, which can be represented to here. But I do think that this is all wick, and then we're gonna melt right after. That's my thesis, right? I could be wrong, but still that's what leads me to think what I think. I'm gonna go into an hourly chart so that I can speak to you better. Remember when we had the massive drop, right? In April, we had a massive drop. Let me just show you this on the daily so you're not confused. So we had this massive drop here. Actually, I'll remove everything just so that I keep your attention. We have this massive drop since April, and then we bounced. And then we had this zone which I expected to bounce from. We did perfectly okay. And as you can see on the daily chart, we have this daily fair value gap here. We have also this one, but it was pretty small. So of course I didn't think that it was going to lead to a massive move down, but I still accumulated a position on the swing short here. Took a position here, took a position here, maybe a couple here, and then I took a position near these levels here too, because of the daily fair value gap here. My expectations now coming on is that this weekly fair value gap will provide the resistance needed. It does not mean that we cannot go to this volume imbalance here, but I really want to see this volume imbalance on a closing basis make price go lower. I don't want us to take these wick or these things. I think NFP was a manipulation, and that it can be it's probably gonna melt. It's my take. I could be wrong again, but if I have to read the price, I have to give you a bias, right? So I won't just not say I have no bias, because I actually have one, and it's for downwards pressure. Now we have this large inefficiency here on the 4-hour. It's going to be interesting to see how we react to this 4-hour for value gap, maybe a little bit of resistance like on encroachment. Want to see how we react here. Do we take this and then we melt? Is there any turtle soup on the daily chart that can happen? We'll see, right? We'll see. But my thoughts is that this weekly is going to provide the right resistance. This was a zone that NQ had to go. at least wick into it, so that would be perfect to drop. Also, if you were to think like a retail person, you would think that this candle formation is indicating of bullish action, right? Because this is like a hammer, right? A bullish hammer. So if you're retail, well, you're gonna think it's gonna keep going higher, and this is perfect for continuation higher if you are retail. Um, of course, we're not retail here. We make money. We make people. We eat retail's stop loss, and so this weekly gap, I think, is gonna push prices down. And let me update you on my beautiful position. So the position is down, of course, because my average entry is at 17,680.75. Now, this is real trading. This is real trading. It's when I can share with you guys what, like, a real position. How do I manage it? How do I manage it even if it's in drawdown? Even if it's not going to the directed zone I intended it to, because you gotta understand, when you're gonna take trades, I would say 80% of the time, it's not gonna be an instant delivery. It's always gonna retrace. It's always gonna keep dabbing into your stop loss, going near it, and just getting around that level. So I want to show you maybe about what I feel right now. Of course, there's some fear in me that thinks I'm gonna get stop lost, like my stop loss gonna get hit. There's also a thought in me that might think that, yeah, I'll be right, and then but it's gonna take too much time, so I'm gonna get stopped out again. There's also the thought of me that's like, well, maybe I should have, took my stop loss and bring into profit when it was around these levels. I would have made like I would have made probably like $2,000 if my SL was around this, and then this whole thing was just going higher. But I wanted actually to feel this with you guys because it's more real. I know that I should have trailed my stop. That was the basic move, right? But when you have a community like this, you want to show multiple facets of price. I don't only want to show you where I'm winning, and every trade is a winner. Of course, 90% of my trades here were a winner. Only one was a loss, and it was not meant to be. So actually, I have a pretty good win rate. But this is an instance where I want to show you guys what it's like to not be profitable, or not be in a trade that goes to exactly to what you wanted it. Because of course, the NFP week could have also just went down and took every SL right here, just melt. But what it did is that we did a fake wick here on the same hourly chart on Tuesday, and then we pumped higher, boom, and continue higher. We have this buy side liquidity, which were the all-time highs that we had on 2021. So I'm keeping this for building narrative, building also sentiment, maybe relative strength as far as the other indices, and just to show you guys how it can be used. I'm giving you a hint with this. But as you can see, price is still on the weekly fair value gap. Nothing is to worry. It's on the expected retracement zone. Now I want to see this. Can barely see anything with these. Let me fix that for you. I want to see this weekly gap. Although it's small, I want to see it bring price lower. And I want to see that happen during the course of the next 2 weeks. If we're going to keep chopping here, maybe dab into this volume imbalance here that I noted here, it's fine. I might add a position here just to show you what truly sticking to your bias means, although it might not be the best thing as far as risk management. I just want to show you what it is to believe in a trade and to play it out without having stress or having pressure, because this is all paper account. Like, I have no money in this account. I could have made 50% of a profit and just call it a year, brag to you guys and tell you I've made 50%, and then just call it a week and call it a year and say I'm the best educator out there. I show you every trade, right? But the truth of the matter is, I want to show you the account now. It's 8,200. The account was at this, and now the P&L is this current position short is here. Everything is here. Every single one of my positions is here. This was a mistake. This also was a mistake, and this actually I didn't thought that the trading view had set the position, so it did not have a stop loss on my screen where it actually did. So there was this mistake, but again, the swing that we had was amazing. Now this position, of course, it's down a lot. Usually when you're in a real account, when you're not trying to prove a point like me, you're gonna need to, of course, manage your risk, and this is way more than what you need to risk. But again, it's just to show you guys what believing in a trade and what believing in your narrative means a lot. It means everything, actually, because whenever an action happens, okay, if the narrative is still on, it's still on. If you haven't, it doesn't depend on your P&L. That's what I want to kind of tell you. It does not depend on your profits and losses. It depends on, are we in the zones, in the price structure that you expected to? Yes, we're still in the daily fair value gap here. Nothing changed. Nothing is still in effect. And gonna close this in a little while, but I just wanna tell you guys, if you had trouble reading price in the past week or so, the week prior to that, don't feel ashamed. It's not the easiest one to read. If you're in the mentorship, you had the levels called out, you had everything called out, you had the possibilities, you had the private chat with everything. You know more than other people, right? Than just your Joe Blow going to the general chat and asking, is Tesla gonna go to the moon, right? Not saying it happened, but still, I wanna keep you guys in touch during the week. We're gonna follow through this week. I'll show you how the position is, and my stop loss around 18,400. So of course, to me, now let me confuse you with a lot of lipstick. Just focus on my arrow. To me, this is all original consolidation. Okay, if we have a market maker sell model, it could test the original consolidation and then go lower. As you can see, the wick here is exactly consequent encroachment. So this is a little gem I'm dropping for everyone. This is free, right? But still, I wanna give the minimum, and I'm gonna close this video by saying good luck, good trading. And tomorrow, it's not the best day to trade. There's no news. I expect it to be either consolidation or a complete expansion, like a reversal. In both of these cases, if you don't have the experience to take it, if you've never done this narrative, if you've never done this narrative at this time, at this month, at this week, and the first week of the month of May, do not trade it. Read it, or tape read, or look back the previous years. What happened on this date, on May 2023, 2022? Look at it, and then see if what I says is aligned with it. See if it's gonna pan out. See what happened. Have you watched your commitment of traders? Have you watched the seasonal tendencies? Have you watched your DXY? Have you watched the macroeconomical news? All that is going to come into consideration when you're willing to take a trade or not. Thank you for being here. Thank you for listening. I thank you so much for giving me your precious time of your weekend or of your week to be here. Thank you so much for believing in me. Thank you so much for believing in yourself too, because you're here because you want to be better. And I do my best to give you all the very best. And I'll give you even more. I'm working right now on some advanced courses. So stay in touch. See you inside the community if you're not in. If you're inside the community, I'll see you inside. Peace.